And just to backtrack, one of the most popular guarantees is the guaranteed lifetime withdrawal benefit.
Right.
Just briefly, how did that work? So the stock market tanked, for anybody out there who's confused about this, because I tend to be one of the people. I'm still learning this. So.
Right. Well, it is exactly what it says. It is a guaranteed lifetime withdrawal benefit, and those benefits held up and said what you had at the time in those portfolios would be there for you for those withdrawals throughout your lifetime, no matter what happened in the marketplace and no matter how those sub-accounts may have dropped in value, that benefit was going to be there for you. And I think that was what provided the comfort and the excellent night's sleep for Americans that had that benefit.
Okay. And so what's the future of these various guarantees, which really have boosted sales of, stock market linked, the retirement savings and income products, variable annuities? So what's the future of them, whether it's that one, all of the others?
Well, insurance companies are have taken a step back during this last year since the meltdown, and they're looking certainly you have a responsibility to make sure that you keep that insurance company financially sound. These insurance companies have been around for 100 and 150 years, and it's your fiduciary responsibility to make sure that they're going to be around 100 and 150 more if you're going to make these kind of long-term promises. So they've been working hard to look at these products to be sure going forward that those companies providing these benefits are going to make sure that they're appropriately priced. Now that they have seen the perfect storm, I believe that they will be able to have a better look at this spectrum altogether and do better pricing. They may scale the benefits back and they may not be as rich as they were, but they still will be there. These products are going to, I believe, as Americans tippy-toe back into the investment waters, these are going to be the types of products that provide the ability to participate in the market, but to also have those guarantees during the times that that we may see losses or the market take a swing downward. So I believe that the growth over the next several years with these products, the newer products, some of the as companies are retooling, building some I think they've been in a year of innovation. This has brought about innovation. I think that these are going to be what is widely adopted by advisors and American consumers as a portion of every retirement portfolio.
Do you have just a sense, again, because I'm seeing it in conference calls or in various sales data that you come out, can you get a sense of which companies? I'm seeing many, a lot, some aren't. A pure various, say with the one we just discussed, the guaranteed lifetime withdrawal benefit. Are companies just, some companies getting out of it completely, scaling it back? Are they, what's going on completely? Are they going to be eliminated? What's going to happen here?
I think what we're seeing is many companies are building solution mixes. You are going to see they will have a fixed product. They will have something that looks more with passively managed funds in them. You will see the traditional VA with the guaranteed benefits, living benefits in them, and you're going to see an immediate annuity. You're going to see an array of products, and so they will have a solution mix. There are those that may scale back away from the traditional VA market to something that has the different types of riders and benefits in them. So I think that I think we're going to see good quality products. We've gone through innovation. We're seeing good quality products. We're seeing different types of benefits, new benefits. Of course, we're seeing some new pricing because now we know that they were probably not priced adequately at many companies. But I have not seen an exodus in the market at all. I'm seeing companies become innovative. I've seen them retooling and rebuilding and figuring out how it is that they want to be in the marketplace, what is going to be their niche in the future, what share of the market they want. They're going to be much more strategic. I have not seen the exodus. In fact, I've seen a few companies take a step back for 6 months, and now they're re-entering the marketplace. And they did it for financial safety and security reasons. So, but I do think that these are going to be the retirement security products are the other products of the future in America.
So again, when you say living benefits, they're not going to go away then. But
No.
again, they're going to, I am saying, yeah, the prices, the fees, everything's going to have to go up, though. They are going to be more expensive for the consumer.
Yes, but I think consumers have also seen the benefits of these products, and all of us are willing to pay for something of high value.
Understood. Now let's turn once again to regulatory. What's your take on financial services reform being debated in various forms at the federal level? What changes would impact your member companies most?
You know, the IRI's membership is insurance companies. We also have the distribution firms that represent these products. So we have banks, wirehouses, broker-dealers, and the independent firms who sell these. And then we also have the asset management firms. We have been keeping an eye very closely on the Consumer Products Financial Products Commission, and actually testified before the House Financial Services Committee in June. These products are already regulated by the SEC. The broker-dealers who sell these are regulated by FINRA. The advisors and the products are also regulated by the states. So with this dual regulation over this marketplace, we don't feel that a third Financial Products Commission is worthy of oversight of the annuity products, and so we're feeling very good that they have been pulled from them, and that we're very comfortable with that legislation. We're watching the fiduciary standard for financial advice. We're watching the regulatory reform over the insurance sector. Clearly, you know, one of the bills has the Federal Insurance Office and Treasury, which we think is very important. As we have seen over the past, this meltdown has brought about, at first when I was with the NAIC and seeing how the bond insurers had an impact cross-sector as we started seeing this meltdown come to bear, that it had implications on a national scale and not on the state scale, even though the bond insurers were state regulated. And now that I'm with IRI and I'm seeing that that it was a national scale with regard to the cross-sector risk that were out there, and that the national government needs to play a role in insurance regulation. It is national in scope and international in scope, and so we're watching that, and hopefully that we have some information at the federal level now about insurance companies and the financial risk that are there.